Welcome back. The market is up 80 points, which means it's come off the day's high. We were up 110. So the Nifty day high is 13,250. We are at 13,215. So that's a 35-point knock from the day high. Let's talk about some corporate developments now. Amit Tolani is Chief Marketing Officer at CEAT, and he's joining us to discuss the latest developments. There is, of course, an agreement with which CEAT has gotten into with Nissan to supply tires to a particular model and range of cars at Nissan, which we will talk about in just a bit. But Amit, thanks for coming on the show. I want to start by asking you, how are costs looking for you now? Rubber prices are at multi-year highs. Second quarter and the first quarter as well. I mean, dramatic cost controls. Margins were you were able to keep margins high enough, but with the reopening, other costs coming back, rubber prices at multi-year highs. What are costs at CEAT looking like now?
Hi and good morning. The costs have been steadily going up since the quarter began in quarter three. And that's going to be the trend. There was a bit of a slowdown that happened in Q1, and as the markets open up, as the demand is increasing, and as productions have been ramping up, there is a increase in the input costs. So we see that, and it is as per what we expected. It's not a surprise for us, and there are adequate measures that we are taking to ensure that we mitigate the cost increase.
Amit, morning. So by how much have the costs gone up for you, say this quarter vis-a-vis the previous quarter? And what are the measures that you're taking? Are you looking to pass it on? Have you already passed it on?
So there has been a pass on to the market as the month began this month. And there's a plan. So as the input costs go up, we have no choice but to pass it on to the consumer. And that's the first and foremost reaction. We've been very prudent at looking at costs, looking at our operating expenses, and working towards that and ensuring that we mitigate these price increases.
Okay, so you took price increases at the beginning of this month, and you said you have plans for further increases?
So it all depends, Prashant, on how the market progresses, how the input costs vary. But yes, we can't. So there is a plan for it, obviously.
Okay, this quarter itself?
Yes, this quarter itself.
Okay, so I mean, you said you've adequate measures to mitigate these rises in costs. Any sense, because there's 2 months of the quarter already done, you have a fair sense of where things stand. What would margins be at? Would they be at the same levels what we saw in the second quarter?
So the margins would definitely come under some amount of pressure because the input costs are higher, and also the mix gets a bit changed, right? So the OEMs have now started ramping up in this quarter, so the mix becomes a bit unfavorable as aftermarket and OE share kind of changes a bit. But that's how it's going to be. It's not going to be as good as the quarter went by.
Amit, what about volumes and production so far in this quarter? What are the numbers looking like? And if you could give us a quarter-on-quarter and year-on-year comparison.
No, so as we've been saying that this quarter has been a very buoyant quarter. The OEMs have opened up, which were a bit slow in the earlier part of the year. So the volumes are going to be at its all-time high. That's what we are looking at in this quarter. All the three businesses are firing, and they're firing at full blast.
So, I mean, I think in the last quarter, the share of replacement demand was much higher, right? I mean, will the mix change significantly?
Yeah. So
in this quarter towards OEM, and and you can talk about profitability in both these segments. Yeah.
So we've just partnered with Nissan on its new Magnite. Okay, that's the SUV that they've launched, and it's a premium offering from them. And we have the best-in-class sectoral drive platform that we've offered them. These tires were tested in Japan. So that's just one bit of the story, where we are now partnering with all premium OEMs for the premium sedan, premium UV space, so that we increase our market share there and also increase CEAT's presence in the consumer's mindset. So definitely that's the way forward. There will be a bit of increase in the OE business, and that's as per what plans have been all along. We believe that you have to have a significant presence in. Sorry, yeah.
Anu, go ahead.
Yeah. So we believe that we need to have a significant presence in the OE space as the consumers look at shifting to the same brand of tires that they had when they purchased over the OE vehicle. So that's how we are progressing on this, and it's as per what our plan has been all along.
Current market share of CEAT, if you have the number, and if it has gone up, by how much?
Okay, so in the passenger space, from our pie perspective, we are having a 35-40% play in the OE space, and that's how we intend to keep it at. We have our new capacities that are ramping up in Chennai. So while the percentages remain the same, the absolute volumes are going up, and that's how the things are right now.
We had a bunch of other questions, but we're completely out of time. At 12 noon today, we have the RBI Governor who's going to be addressing a press or taking questions. So we'll wrap this up here. Amit, thanks very much for coming on and answering all those questions. Hope we can have you back on for longer. And we can take more questions and discuss this further. CEAT is up about 0.7%, so margins will come under a bit of pressure, won't be maintained in the third quarter. Volumes, though, are at all-time highs, and the share of OEMs will be much higher in the third quarter as compared to the first half of this financial year. We'll take another quick break here. We are back. More comes up on the other side.